Hello and good morning, class. In this lesson, we will talk about flexible budget and performance analysis. The following are our learning objectives, so kindly go over them. For our first learning objective, let us prepare a flexible budget. Now, if you recall, yung lesson natin before this lesson is master budget. Now, yung budgets that we explored sa master budget lesson, we're planning budgets. A planning budget is prepared before the period begins and is valid for only the planned level of activity. A static planning budget is suitable for planning pero inappropriate siya for evaluating performance. Why? Because it will be difficult when actual activity differs from your planned level of activity. So comparing static planning budgets with actual costs is like comparing apples and oranges. Kasi dapat, if activity is higher than expected, variable cost should be higher than expected. If activity naman is lower than expected, then variable cost should be lower than expected. So, with that problem, using static budget, we come up with flexible budgets because your flexible budgets take into account how changes in activity affect your costs. These are the characteristics of your flexible budgets. So your flexible budget can be prepared for any activity level basta it's within the relevant range. It shows costs that should have been incurred at the actual level of activity, enabling apples to apples or oranges to oranges cost comparisons. It will help your managers control your costs. And of course, with that, it can improve your performance evaluation. Now, let's take a look at a main corporation as our illustrative problem in this lesson. A main corporation bases its budgets on the activity measure customers served. During May, the company planned to serve 38,000 customers. The company has provided the following data concerning the formulas it uses in its budgeting. So kindly go over them. So here is the budgeted income statement for Imen Corporation. So Imen budgeted diba 38,000 customers to be served. So how much revenue would that be? Using yung data from the previous slide, ang sabi doon, your selling price per unit is 2.70. So if you have 38,000 customers, at how much revenue would that be? At 2.7. So that's a total of 102,600. And then your expenses, what are the expenses? Wages and salaries. There is 36,300 na fixed element per month. And then yung variable component nun is 80 cents per unit. So 38,000 plus 80 cents per unit. Sorry, 38,000 multiply that to 80 cents per unit. Then add to that your fixed element of 36,300. It will give us a total of 66,700. And then for the supplies, walang fixed element. What we have is only a variable element of 30 cents per unit. So 30 cents, multiply that by 38,000, you get 6,000. You get 11,400. Insurance naman, walang variable element, only fixed. How much is the fixed amount? 6,900. And then for your miscellaneous, your cost formula, if you refer again to the previous slide, is 6,200 fixed cost plus 20 cents per unit sold. That will give us a total of 13,800. When you add all four expenses, the total is 98,800. So revenue of 102,600, expenses of 98,800, it will give us a budgeted net operating income of 3,800. The company has also furnished its income statement for May. So the actual customers served is 42,000 versus the planned level of 38,000. So we have here revenue of 115,500 for the 42,000 customers, and our total expenses amounted to 110,000, thus giving us a net operating income of 5,500. In this slide, we can see a table comparing the actual results versus your planned budget. So your actual result shows that there are 42,000 customers actually served versus your planned budget of only 38,000. So revenue-wise, we can see there is a favorable variance of 12,900. Why is this favorable? It's simply because your actual result of $115,500 is higher than your budgeted revenue of only 102,600. That is why if we compare your revenue, it gave us a favorable variance of 12,900. Now, if we take a look at your expenses naman, puros unfavorable, no? Nakita natin, all four expenses ang binigay sa atin na variance is unfavorable. Why is that unfavorable? Because your actual result, yan, makita ninyo, is higher than your planned budget. Now, why is that unfavorable? Kasi expenses ito. Syempre, kanina sa revenue, we want na yung actual will be higher than your planned budget. Pero this time, we're talking of expenses. What we want para maging favorable yan, we want na yung planned is higher than your actual result. Now, to continue, so yun na nga, mas malaki yung actual compared to your planned budget. So we have unfavorable variances for your expenses. If we take a look naman at your bottom line or your net operating income, mas malaki pa rin yung actual result compared to your planned budget. That's why we have a favorable variance. Now, is this tama? We will find out later. Again, by looking at this table, what you are comparing, you're comparing your apple to your orange. Bakit ko nasabing you're comparing your apple to your orange? Because the number of customers served, magkaiba. So, let's leave it at that muna, and then we will continue with the next slide. So how do we flex a budget? Now, in order for us to do that, we have to recall yung cost behavior. Remember that your total variable costs change in direct proportion to changes in activity, habang yung inyong total fixed costs remain unchanged within the relevant range. So this is immense flexible budget. So sa flexible budget, we adjust yung ating income statement based on the actual number of customers served. So, yung flexible, para siyang combination ng what you have budgeted and the actual result. So, sa flexible budget, ang gagamitin natin na driver is yung actual, pero yung budget, yung cost budget is based dun sa budgeted. So, let's repeat that. In the preparation of your flexible budget, we will be needing data from your actual and from what you have originally budgeted. So, yung cost formula will come from your budget, pero adjusted yung cost formula nun kasi yung driver na gagamitin natin will be the actual result. So in this case, we will be using the actual number of customers served. How many is that? You have 42,000. So if we look at revenue, your revenue will be, your flexible budget with revenue will be 113,400. Paano siya na-compute? And dyan makikita natin, that's 42,000. That's your actual number of customers served. Multiply by your budgeted revenue at 2.70 per customer. Wages and salaries naman, if you remember, yung wages and salaries ninyo, yung cost formula ninyo is a combination of a fixed component and, fixed element and a variable element. So, yung variable part is 42,000, multiply that by 80 cents per customer served, plus the fixed part of 36,300, for a total of 69,900 as flexible budget for your wages and salaries. Supplies, wala siyang fixed element. So, meron lang siyang variable. So, all we have to do is get yung variable cost per unit of 0.30, and then we multiply that by the number of customers served, actual number of customers served. Insurance naman, wala siyang variable element. Ang meron lang siya is fixed. So, if you recall yung slide given dun sa budget, you will see there that the insurance amount budgeted is at 6,900. And then miscellaneous, you have there 14,600. Computed as 42,000 customer served, multiplied by your budgeted variable cost of 0.20 per unit, plus your fixed element of 6,200. So your total expenses will be 104. We just simply added your wages and salaries down to your miscellaneous. So having a revenue of 113,400 and total expenses of 104,000. So we come up with your flexible budget net operating income of 9,400. For our second learning objective, let us prepare a report showing activity variances. So this is how we compute for your activity variance. We just simply get the difference between your planned budget, revenues, and expenses with the result of your flexible budget, revenues, and expenses. So the difference of the two budgets is what we call your activity variance. Here is a table of immense flexible budget being compared with its planned budget. So we can see that with revenue, your activity variance is favorable because your flexible budget is bigger or higher than your planning budget. Because this is revenue, we want your flexible to be higher than your planned budget. For expenses naman, for it to be favorable, we want your planned budget to be higher than your flexible budget. So if it's the opposite, then that will be unfavorable. So activity variance for your expenses, wages is unfavorable, supplies also. Insurance, wala tayong, what do you call this? Wala tayong variance because nga, diba, if you will recall, sa flexible budget, fixed lang naman siya. So, whatever was budgeted, yun yung amount na ilalagay natin. We will not adjust it with the number of customers served. So, insurance, since it is purely fixed in nature, wala tayong variance. Miscellaneous, that is also unfavorable. Unfavorable because flexible nga is higher than your planning budget. But if you look at your net operating income, your activity variance is favorable. Now, in short, activity tells us, mas marami ba yung, in this case, your activity is customer served. Mas marami ba yung activity ng actual versus what you have budgeted. So, since mas marami yung activity ng actual compared to what you have budgeted, at the end of the day, when you look at your net operating income, we will expect that your activity variance with regards to your net operating income will be favorable. For our third learning objective, let us prepare a report showing revenue and spending variances. So let's compute for your revenue and spending variances. So how do we compute first for your revenue variance? Madali lang yan. All you have to do is get the difference between your flexible budget revenue and your actual revenue. Now, when can you say that the variance or the difference is favorable? It is favorable if your actual revenue is higher than your flexible budget revenue. So let's repeat that. For you to say that your variance or your difference is favorable, dapat yung actual revenue natin must be higher or greater than your flexible budget revenue. With regards naman to your spending variance, paano natin mako-compute yan? Again, just get the difference between your flexible budget cost and your actual cost. Now, the question is, paano mo ma-determine if yung variance is favorable or unfavorable? It will be favorable if your flexible budget cost is higher or greater than your actual cost. If the opposite will happen, meaning your actual cost is higher or greater than your flexible budget cost, then your variance is unfavorable. Here is a comparison of Imen's flexible budget with its actual results. So with this one, we are able to compare now apple to apple. Why? Because what you will be comparing is your flexible budget. Now, if you recall, your flexible budget is the budget adjusted to the actual activity driver. In this case, your activity driver is the cost number of customers served. So we are now able to compare apple to apple. So let's see if our revenue and spending variances are favorable or unfavorable. Now, let's start with revenue variance. With your revenue variance, we can see that your variance is favorable at 2,100 na difference. Why is that favorable? Because nga, your actual result is higher than your flexible budget. Pero all of your expenses or your spending variances are all in the red. Lahat sila unfavorable. Why is that unfavorable? Because your flexible budget is less than your actual result, or your actual result is higher than your flexible budget. So the total spending variance is 6,000 unfavorable, while your revenue variance lang is only 2,100 favorable. That's why if you look at your net operating income, your total revenue and spending variances is unfavorable. Unfavorable by how much? 3,900. Ano ang breakdown ng total revenue and spending variances natin? 2,100 favorable revenue variance, and you have 6,000 total spending variance na unfavorable. The breakdown ng 6,000 na total na unfavorable spending variance are wages 2,800, unfavorable supplies 2,600, unfavorable insurance 500, unfavorable, and miscellaneous expense of 100, unfavorable. Let's proceed with our learning objective 4, and that is to prepare a performance report that combines activity variances and revenue and spending variances. So this is how your performance report combining activity and revenue and spending variances will look like. So makita natin dyan, yung gitna ng planning budget and your flexible budget is your activity variances. Kasi nga, diba, if we recall from the earlier slide, ang sabi natin, for us to compute for your activity variance, all we have to do is get the difference between your planning budget and your flexible budget. And then to get your revenue and spending variances, all we have to do is get your flexible budget, get the difference between your flexible budget and your actual results. So if I will ask you to prepare a performance report combining activity and revenue and spending variances, this is how you prepare it. So kindly go over the format. The amounts, we have already computed them earlier. For our fifth learning objective, let us prepare a flexible budget with more than one cost driver. Most often, more than one cost driver may be needed to adequately explain all of the costs in an organization. The cost formulas you use to prepare a flexible budget can be adjusted to recognize multiple cost drivers. To illustrate Learning Objective 5, let us consider itong following information. Sabi dito, because of the large unfavorable wages and salary spending variance, Iman decided to add an additional cost driver for wages and salaries. The variance is due primarily to the number of hours required for the additional edging and trimming. So Iman estimates the additional hours and builds those hours into both his revenue and expense budget formulas. Iman will charge the customer 1.20 cents per hour spent on additional edging and trimming. Iman will also set an additional budget of 60 cents per hour on its salaries and wages budget. So here is the modified flexible budget for Iman, considering the new cost driver of number of hours. So your revenue this time will be 125,400. The breakdown of that is 42,000 times mo ng 2.70 na revenue rate for the number of customers served, plus yung 10,000 actual hours, multiply that by your budgeted of 1.20 per hour. That will give us a total of 125,400. For expenses naman, since ang binago lang natin is wages and salaries, that is why it is highlighted in red. All the rest, supplies, insurance, and miscellaneous, they remained the same. So for your wages and salaries, your cost formula now will be 36,300. That's the fixed part, plus 0.80 multiplied by the actual quantity or customer served, plus this time an additional of 60 cents per oras spent on edging and trimming. So applying the cost formula with your actual cost driver, it will give us wages and salaries of 75,900. So our adjusted flexible budget net operating income is 15,400. Paano nakuha yan? Just get the difference between your revenues of 125,400 and your total expenses of 110,000. For our last learning objective, kayo ang gagawa nito. So you read the book or you search the net and then you reflect. Okay, you pause, you reflect about the lesson para mas lalo nating maintindihan. And in the process, I want you to identify common errors made in preparing performance report based on budgets and actual results. Ito yung sinasabi natin when you compare your apple with your orange, or you're comparing apples and oranges. So that's it. That ends our discussion on flexible budget. As always, I will see you on Friday for our synchronous discussion. So guys, keep safe parate and God bless us all.